Hello, everyone. Welcome. We'll get started shortly, guys. Welcome, everyone. Welcome. We'll get started shortly. Welcome, guys. We'll get started shortly. Welcome, everyone. Welcome. Welcome, everyone. Welcome. This is our beginners class. We'll get started. Welcome, everyone. We'll get started shortly. Welcome, guys. Welcome. Hey, Dean. Welcome, Dean. Hey, Solomon. Welcome. All right. All right, guys. This is our beginners class. I want to do something different this evening. I'm going to share my screen. What I want to do this evening is I want to find out what questions. So we're going to have this evening Q&A for beginning traders. All right. And what I want to find out, especially pertaining to the systems or just the market in general. Anything you guys want to, any questions on anything or anything you guys want to learn more about, find out more about? Dean, Solomon, any questions on anything? Any help that you guys think you need?
Hey David, this is Dean. Hi.
Hey, Dean.
Yeah, so far, what I've been doing is I've been going over the previous uh, meetings that we've had. So a lot of the questions you're actually answering. It's funny because even though we're live, there's
Mhm.
some things that when you see it again, you're like, I get it. So
Yeah.
it's pretty good so far. Um, one of the things that we didn't we did cover it a little bit, but I was interested in the indices. like the S&P 500, the VIX, and all that stuff, and how that impacts the market.
Okay. So the indexes. Okay. I do remember you'd asked that, and we kind of missed that, right? Okay.
Yeah. Mm-hmm.
We'll talk about the indexes. Anything else? Anything else you guys want to touch on this evening? Solomon, do you have anything want me to touch on, talk about?
Um, Good evening, Mr. David. How you doing?
Good evening.
Yeah. Yes, sir. We could also still go through the basics of entry and exits of trade.
Entries,
You
so
know.
entries and exits using the systems.
Yep.
Okay.
So like how you could identify clean entries and also identify clean exits too. While using the system.
Okay. And we'll probably talk about some of the yen pairs too. The yen pairs gave some sell signals today, so we could use some of those as examples. Okay. So what we'll do with this beginners class here is we'll kind of focus on the systems and the markets, and hopefully you guys can get some good information. And hopefully my screens don't freeze up. I have another long day again with TradeStation. So all right. So then let's talk about the indexes. All right. So when we trade equity stocks, okay, the first thing we need to pay attention to is how
Hey, David.
the
I don't know if
Dow.
it's me, but you're breaking up.
Okay, how about now? Is this better? Can you hear me clearly now, Dean?
Yes.
I am getting some background noise on your end though.
Yeah, I'm sorry. I'm in my board meeting. I'm
Oh, okay.
recording a board meeting, so let me go get to a quiet area.
Okay.
Sorry
Solomon,
about that.
can you hear me okay? Am I
Yes, I
clear?
can hear you. I can hear you very clear. Yeah.
Okay, okay,
Yes, sir.
okay. We'll wait for Dean. Solomon, did you
Hello?
oh, Dean, you back?
Yes, I'm back.
Okay, good. Good. Okay, before I get started, Dean, is there a specific question that you had or something? What are you looking for?
So I know you had mentioned to me, the what to look at first, like the markets and then the sectors and then the stocks and things like that. And then you said, don't dwell on it too much, but just know that it's there and in the background, but don't look at it on a daily basis. I just, um, but I'm looking at, I see buy signals. Those are buy signals, right?
Yes, right here. Yes.
Right. So how do I, so is it, you go down to, you start at this level and then you start dwindling down to the different uh, systems to determine where your buy signal was based on the indexes?
Okay. All right. So when we look at the indexes, okay, um, just like everything else, we want to follow the four market phases. Okay, but before we trade at all, before we do any trading, we want to break it down, right? We want to first start with the equity markets as a whole. All right. And the equity markets are made up of the major indexes. So the Dow, right? The S&P, the NASDAQ, and the Russell. All right. Keep in mind that a large majority of the stocks that are out there, all right, will follow the major indexes. So you will have 80, 90% of the stocks will go in the direction of the indexes. All right. So that's why this is critical to know what the indexes are doing. So for instance, if um, oh, if the Dow is going through the markdown phase, right? So if it's going through the markdown phase, boy, all right. So if it's going through the markdown phase like here, right? Markdown phase here, just know that the majority of the stocks that are out there will follow the same markdown phase.
Got it. Mm-hmm.
And if it's vice versa, right? If the market is in the markup phase, the Dow, right? The Dow, S&P, Nasdaq, and Russell, if they're in the markup phase, the majority of the stocks that are out there will follow this direction.
Yeah.
Okay.
Okay.
Yeah. So that's why we need to follow the major indexes because the stocks are in, right? So the Dow 30, right? So the Dow 30, lot of the big companies, right? Like IBM, those big companies are part of the Dow, right? And then you have the Nasdaq, mainly tech stocks, and S&P, right? S&P, and then the Russell. So the stocks make up these indexes. So we want to pay attention to the indexes, and then we want to pay attention to the sectors, and in that order. All right, and then the sectors are here. So like biotech, energy. Biotech is really an industry, but we have it up here as a sector because it's a big industry. Financials, utility, healthcare. So we want to pay attention to the indexes first, then the sector, then the stock. Okay. Along with the indexes, we want to pay attention to the VIX. Now, the VIX is perhaps, I wouldn't say it's more critical, but it is as important as the indexes. Okay, so we'll use the indexes to get buy signals, right? When the price breaks resistance, but the VIX measures volatility. Okay, so let's talk about that.
And I had a question about that.
Okay, go ahead.
Particularly in the VIX, I'm glad you blew that up because maybe I don't know if I'm seeing it right, but it seems that there's a pattern. It seems like when it goes down low and the lower it goes, it's better for the equity market, right?
Yes.
But then it seems to spike. I see it 1, 2, 3, 4 times it spiked and it went critical, and it looks like we're about to do that again. Is that correct?
Okay, so it spiked where? Hold on. Where did it show me where it spiked? Show me where you're seeing the spikes.
The green when it's topping. So that means the fair,
right
a
here.
higher amount of fair. Yes, yeah, there. I don't know what periods are those. Are these yearly or?
So let me bring in. I will bring in the dates for you.
Okay. But it seems like it's consistent. Like everybody gets comfortable and then they get crazy.
All right. Let's see here. Yeah. All right. So let's do this. So time. and the price. So we'll bring those in. And then we'll move it from a daily to a monthly.
Okay. I see it now. I see it.
Okay.
Okay.
Let's do this one. Let's add something here. The VIX, equity traders really pay attention to the VIX. You can actually trade the VIX too.
Yeah.
Let's see here. Let's go here. One sec. Let's see. I want to bring in more data here. All right, so let's go back 60. Okay. Does this help? Is this clearer here?
Yeah. Yes. Yes. I see it now. These are the years, right? So it's on a yearly basis.
Mm-hmm. So
Okay.
we're going to do this.
Well, there was a 2008 crash. I see that.
Yeah. All right. Okay. So here is 50. Here, 50. You can see where it hit 50 several times here. Right here,
Yeah.
50. 50 is an important number. And then above 80, let's take a look here.
It's critical.
Mm-hmm. So since 1998, we've only got to 80 twice.
2008. COVID? Was that COVID?
Yeah, COVID and then the crash of 2008, right?
Yeah. Interesting.
Okay. And then let's bring in one more. Okay. All right. So this is 2000. Well, all right. Okay. So Dean, tell me. So what can you make out of this here?
So to me, it looks like there were long periods of good times or positive sentiment, and then there are those periods where it just spiked, whether it's 9/11, 2008 crash, and then there's some other. I'm pretty sure we could pinpoint those other spikes, that the 50, the ones that are in the 50 range, the
Mm-hmm.
specific, uh, you know, events that transpired at that point. But what I was trying to decipher from this, well, we can plan for, uh, based on the regular it seems like a regular pattern, that there's a long periods of good times, because the one on the bottom, those are good periods, right? It's like
Yeah.
12,
So
2013, 14, 15, 16. Yeah, it looked like there's some good periods there.
now I wouldn't call it good period, right? Let's just say
Okay.
let's just say low volatility.
Low volatility.
Low
Okay.
volatility. Low volatility. All right.
Okay.
So low volatility. So the equity markets, traders in the equity markets they hate volatility. All right.
Okay.
So unlike forex, where in forex we have more traders, right? More traders. Even in the futures market, there are more traders. In the stock market, you have more investors. All right.
Yeah.
Right.
Gotcha.
You know, you got that buy and hold mentality in stocks.
Yeah.
Right. Right. A large percentage of. So those investors, all right, hate volatility. Right. And why do you think they
Okay.
hate? Why do they hate volatility? Why do you think they hate volatility?
I guess they want consistency. They don't like the uncertainty,
Yeah, so
the
they like,
fluctuations.
yeah. So they want that certainty, right? Because they're buying and holding, right? They do not want
Yeah.
any dips, any corrections in the market. Okay, so
Yeah.
they want low volatility. So low volatility is going to be down here. This number right here is about, here is 22, down here is about 10. All right. So the lower that number on the VIX, all right, the lower that the volatility. All right. And yeah, it's good times, right? Like you said, it's good times, but really it's low volatility. And what that means when the VIX is low here is that the market, the equity markets, the Dow, the Nasdaq, the S&P, they're all moving higher, right? Trending up really
Got it.
nice.
Okay.
Okay. So it's the reverse from what we think, right? Normally, when if an instrument goes down, that's bad, right? We think that's
Yep.
bad. But for
Yep.
the VIX and for the equity
It's
markets,
inverse.
that's good. Yes.
Got it. Okay.
Okay. The longer the VIX stays, and ideally below 20, right? We needed to get below 20 in the red zone. So
Yep.
let's call this, we'll call this the anything below here, right? It's like
Yeah.
the red zone here. That's ideal for investors. All right.
That so as a trend follower, we know automatically that equities is the place to be in, more so over than forex or futures, or not to say that you can't trade them, but you have more um, benefits going towards equity.
When
The
the
lower the mix,
when it's below 20.
below 20. Yeah.
Yes.
Okay.
Yes. Yes. If it's below 20 and the lower it is, like right, low teens, right? Very, very bullish, very bullish. You can literally buy anything and it will go higher. Okay, it'll go up. Okay.
Okay.
All right. So um if it's above 20, then that's a concern. Hey, Gerald, welcome. Okay. If it anytime it's above 20, all right, you might get corrections or you might get some consolidation in the market. All right.
Yeah.
When it starts to move like right here, you can consider that bearish for the market. Anything above, just anything above 20 is not
Yeah.
good for the VIX.
Okay.
Okay, not good for the VIX. Um, anything above 30, if it starts getting above 30, you're gonna start to see some panic, right? A little bit of panic in the markets, right? Just think of third, above 20, right? You getting in that, perhaps you might be in that distribution phase, getting ready to um, break support levels, all right, near 30, right? You definitely in the markdown phase, and you'll see that, yeah, you'll see that on the Dow charts. So the Dow, the S&P, Nasdaq, and Russell. All right. If it gets in the 40s, 50s, and 60s, boy, you're really in a solid markdown phase. Okay.
Got it.
When if it gets up to 80, like it did here and here, that's your crash. Okay. Even 50 could be considered a crash. All right, or just
Wow.
a big correction. All right, like here, 2001, 2002, right? It hit
Right.
about
Mm-hmm.
50 right here, and that was pretty bad. But 2008 was really bad. 80 is high. That's
Yeah.
high. That's a lot of fear in the markets, a lot of panic in the markets. Okay. All right.
So does it still stand? Buy when everyone's fearful. So that statement still stands in most cases.
well, let's see here. Let's do a side by side. Yes, but your timing, right?
Yeah.
It's all about your timing. So yes, we can certainly do that, but we've got to wait, right? Right. So, there's sometimes when you'll have a V correction where it does something like this. Hold on. But a lot of the times it will flatten out. Um, let's see here. Hold on. Okay, so let's bring in, that's the VIX here. Um, so I want you to see the correlation with the Dow. This is still freezing up. Hold on. Yeah, it's freezing up on me. But yeah, then there's a good correlation. All
Okay.
right. Yeah, with so yes, you would definitely want to buy, but we would wait, right? We would wait for those buy signals, right, to come in
Yeah.
on the right sector. Okay. Uh, what you will notice is that here, see right here, it hasn't been in this area here since 2018.
Mm-hmm.
All right. And then 2007, 2006, 2007. This is where markets made really good highs, right? Really
Yeah.
good highs. This is where we were making all-time highs. So this
Okay.
was about, I think this was about, might have been 15 or so. This was all-time highs in the equity markets. All right.
Wow.
So we are near, believe it or not, we are near all-time highs. See this candle right here? So
Yeah.
we're not too far from all-time highs in the equity markets. Okay, so if the VIX keeps coming down here, like here, keeps coming down, gets to about here, we'll be at all-time highs again.
Mm.
Okay. And then if it gets lower here, this area here, then we'll be breaking the all-time highs. All
Yeah.
right. So yeah, it's a good now. This is a monthly time frame. We usually track it on a daily or weekly time frame. Weekly is a good time frame to track it. We don't want to track it on anything smaller than that.
Got it. Okay.
Okay. Okay.
Okay.
All right.
Thanks. Thanks, David.
You're welcome. You're welcome. and then we go to our sectors. So VIX, I like to look at the VIX, then your indexes, sectors, and then the stocks. All right.
Yeah.
All right. All right, let me do this here. Okay. Now, Solomon, your exits, you wanted to go over exits. So let's talk about that. And we'll take a look at what happened today. All right. So I'm going to share my screen 1 second. All right. Okay, so Solomon, let's take a look here. Entries and exits, right? You mentioned
Yes.
entries and exit, but
Yes,
is
sir.
there
In a
anything in
trade.
particular? Is there anything in particular you want to talk about as far as
Um,
entries and exits, or any concerns with it?
so for instance now, well, like when the system gives the, buy signal, so um we use say, well, is it exactly the when it gives the buy signal one gets in? I don't know if that makes sense.
What's that? Repeat that for me, please.
So I'm saying, like, for instance, when the system gives a buy signal, the blue arrow. So is it
Yes.
exactly on that blue arrow you get in?
Yes, you're going to enter at the blue arrow. Yes.
Not where the blue. So you see there's a blue arrow going up, then there's I don't know, a triangle also,
Okay.
right?
Okay. Mm-hmm.
So where's the best place to get in between those places? The
Okay.
signal or the triangle?
Okay. So let's take a look here. All right. So let's go to CAD yen. CAD yen was the pair we had last night that gave a buy signal. And it's not opening up. Okay, here it is here. Okay. 1 sec. Now you see the blue arrow here? Do you see the blue arrow there?
Yes, sir. Yes, sir.
Okay. Let me open it up. Okay. So here is the candle. So the arrow points to the candle. All right. So this arrow here points to this candle here. All right. The triangle, you see the triangle here? You guys
Yes,
see?
sir.
Okay. That points to the price. Okay. So when we get a
Okay.
buy signal, right, it's pointing to this candle, but here, in this case, at the top, right at the top of the candle would be your entry, would be your buy signal. All right. Now, it doesn't matter. It doesn't matter, right? As long as you're, when you guys enter the trades, as long as it's near that triangle, you'll find. All right. So anywhere near, it could be several candles over too. Right. So it doesn't have to be on that particular candle. So let's say, for instance, you have your buy signal came in on this candle here, right here. Let me draw it out. So let's say here is your buy signal, your blue arrow right here. All right. Then you have another candle here, another candle here, a third candle here, and then you had this candle here. All right. When we enter, obviously we want to enter on the first candle with the buy signal. However, you can still enter the trade. All right. You can still enter the trade if the price is within the candle. So if the price consolidates like this, you can still enter the trade, even if it consolidates all the way down here like this, horizontally, you can still enter.
Okay.
Okay. Even if it pulls back like this, let's say it retraces, right? Here is resistance. Here is resistance right here. We'll say here, resistance right here. So let's say it pulls back. Here is support right here, right? Pulls back within here, right? You can still enter, but just make sure that the price is, the candles are moving higher to retest resistance. You can do that. Okay. What we don't want to do is your buy signal is here on this candle and it's moved up. Let's say it's moved up like this, right? And we'll have traders try to enter it here. That's not good. All right. So we want to, the farther it gets from your buy signal here, right, the worse it is for you, because now we don't have any protection. All right. We have two areas of protection. All right. And those two areas are support, resistance first, which becomes support, and then our real support. A lot of times it will not catch based on how the price is moving, that first resistance. So here's your first, we'll say right here's your first resistance right here. All right. Had the price gone up higher like this, right, then this resistance would become support. All right. But it didn't have time to really become support. So in that case, right, here is your support right here. And this is where it exit, close the trade to get out. Okay, so here was your entry, a buy on a break of resistance, and then a break of support right here, white arrow right here on this candle, but right here, this white arrow right here. Okay, you see that?
Yes, sir. Yes, sir.
Okay, that makes sense?
Love sense, sir. Love sense. So you also just be in between the support and resistance, the
Yes,
buying and the selling.
yes, 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 yes. You're
Day in out.
buying,
Yeah.
yes, your buying and your selling will always be between. That's going to protect your risk, right? Um, the most. Okay, so we're gonna buy here. If the sellers come in like they did here on CAD yen, then we have to close the trade and we have to get out here on a break of support. All right. The other support would be here, right? To get out here. All right. But a lot of times, what might happen is you might get it where the price comes within support and resistance. All right. Never break support. So we'll never close, the system will never close the trade. All right. And then, you might have this here. All right. But always buy on a break of resistance, sell on a break of support. Buy on a break of resistance, sell on a break of support. And the reason why is because this could happen. All right. This can happen here. All right. This is important. So we know how and when the system will give a sell signal to exit the trade. All right. And that's your protection. Let's see if I can find another pair here. Reason up again. Make sense?
Yes, sir, Mr. David. Yes, sir. Thank you.
Okay. Hey, Gerald, do you have any questions on anything?
No, can you hear me okay?
I can hear you okay, yes.
Yeah, I was just thinking like the buy signal right there on that CAD yen. Can you talk about for a little bit the significance of the buy signal when it broke resistance, gave us the buy signal, but the price did consolidate. Can you talk a little bit about how much risk are, we are building the more it consolidates, even around that buy signal?
Even around here?
Yeah, I don't see your cursor. Where you at?
Okay, you see it now?
No, I don't see it. But either way, around the blue arrow, the buy signal, we consolidated 1, 2, 3 candles,
Okay.
and there is a significance in it. I was hoping that you can talk about how when it broke the resistance, it gave us a buy signal. Price went sideways for 8 hours, for eight almost 12 hours.
12 hours, yeah.
And whenever it does that bring more risk into this trade? Because that resistance is a real solid resistance, correct? It's not wanting to get out of that resistance. I mean, that's support.
Support, yeah.
No, there's not the support, the resistance. The resistance is real. It broke resistance and gave us a blue arrow. But after it broke resistance, it never went above resistance for 12 hours. So don't that trade become more riskier the more it consolidates? Is that how we should look at these sideways moves right immediately after the buy signal?
Okay. I don't know. I don't
Because
know.
you're talking about immediately after the buy signal, price consolidated. So the resistance of the blue arrow is resistance. So that means once it breaks resistance, price can move up. But it did not go, none of those candles went above the blue arrow for 12 hours. So even if we would have entered this trade on the third candle, wouldn't that trade become more riskier versus the original candle that gave us the blue arrow because of the sideways movement immediately after the blue arrow? You understand what I'm saying? Am I asking it right?
I know. I hear what you're saying. So you're
saying
saying
every trade is a risk, right? We got to manage the risk, right? So doesn't this look more riskier if he doesn't catch the blue arrow in the next candle and then the next candle? Now he's like, okay, now my capital is in more jeopardy because that is showing a really strong sense of resistance. Price just do not want to get above that. And it did not. It proved that it did not want to get above that.
Oh, I see what you're saying. I see what.
It just did not want to go above that blue arrow for 12 hours. It did not move, and it still didn't move and got us out of this trade. So do we need to look at how price action is immediately after? Because you're right. If price goes up to 102 and definitely 102, we already missed it. It's too. That's a risk. And if we catch the third candle, isn't that more of a risk than the 102? 102, if price gets to 102 and we haven't entered the trade, isn't that a risk? Because we don't have the defense.
If it's gotten to 102 and you're not in the trade, that's not
it's
good.
risky. Yep.
That's
You don't have the defense. You don't have the way the system is going to give you. However, now that the price did not go up to 102 but went sideways 101, 101, 101, doesn't that pose a bigger risk than the 102 getting to 102? Because it's proving to us that price isn't going above your resistance.
Yeah, so the only way if it did this, right? All right. If it did something like this, so if it broke resistance, give a buy signal here, held, 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 green candles, that's not a concern. From here, right here, all right, from here, right, this area right here, no, you're doing exactly what you're supposed to do.
Even though we are buying a, a, a trade that is proving that the resistance is strong right there. That is very, very solid, strong resistance. Even if you go across to the yellow support and resistance, it's the same location all the way across 12-4, like 12-5. Look at December 5th. December 5th had the same price action. December 6th, December 7th, almost the same price action. So you look at that price is a solid number. So once we got past the blue arrow into the second candle and third candle, we have to consider that. I guess I'm asking you. I'm not telling you. I'm asking you. Hopefully you can confirm or disagree.
Well,
We have
okay.
to consider that as more of a riskier trade than even if it did get up to 102. Because at least if it got up to 102, it's showing that it is that resistance is no longer a factor.
Yeah.
That
So too much thinking, right? That's that's too much thinking. Okay. So this is what we want to pay attention to, right? This is our job right here. All right. So just we don't know that this is going to happen here. So
no, we don't know, but we can look at the second and third candle if we hadn't entered it yet. We're talking about not not having entered the trade yet. He asked, can we enter it a little later than the blue arrow? But if you see that, wouldn't it be one of a more concern to not, I mean, I'm not gonna say not enter it, but to be more cautious to enter it a sideways move versus it has already taken off to 102 or 102.5 or whatever.
okay.
I'm just asking more riskier than the other, because they both could be. Everything is a risk, but just more riskier than the other.
No. Okay. So look here for a second. All right. So follow me. Okay, follow me. All right. So here is your resistance here. We'll call this resistance here, right?
That's resistance. Yep.
Okay. Here's your big buyers coming in here. That's a big green candle right here, right?
Right.
And then you've got another green, fairly decent candle here, and then it's consolidating here, green candles.
Yep.
This is very bullish. This candle here, this candle here could have easily done this. So let's say, and we're waiting, right? We're waiting, right? And we're not sure, but we've seen this where now this candle here does this, and now it's totally too late. All right. So while we're waiting, all right. So we have a buy. Think of it like this. So we have buyers come in. We have markdown phase, right? So we did everything right. Markdown phase. Here is support down here. Here is resistance, right? All red candles here. Big buyer come in. That's good. Some more buying came in. That's even better. We got our buy signal here on this arrow, buy signal right here. And guess what? We've got 3 green candles. That's a buy.
Those are good candles. Those 3 candles that we looked at are really good candles.
Yes.
My only concern, Dave, and I was hoping you can and talk about this a little bit. I'm almost waiting for this to actually break out a little bit more before I put the capital on it because of the sideways move. Like I see the buy and I see the green buyers. All 3 of those candles are bullish candles.
Yeah. And you can do that. So there are 2 ways to look at it. Okay?
Yeah.
And Brian does this. Brian does this a lot, right? Brian will wait, right? He'll wait.
Yeah. You wait,
because a lot of times what will happen, you'll get a breakout and then you'll get that pullback, right? That pullback. And that pullback is where you're gonna get traders are gonna get flushed out, right? So they're gonna run your stops, right? So the brokers will, sometimes run your stops, right? So a lot of traders will put their stops right here, right under here, and so they'll move the price down like this, kind of run your stop, kind of do a cup and handle, and then push the price higher. All right. So we have some traders that wait to do that. All right. Um, I don't like doing that. Now there are times when you can do that. You pay attention to the price, right?
Sure.
But because what happens a lot is this, and it's all about your emotions, right? What happens a lot is this. If I can get this to work here, what happens a lot is this. All right. So this can also happen where, hey, you got green candles here. And while we're waiting for that pullback doesn't come. All right. Or while we're waiting for more confirmation, guess what? Price gets away from us. And then there's absolutely nothing we can do. So just know that if we're going to wait, for more confirmation, more candles to build, okay, it's all risk. It's all risky, right? But if we're waiting for more candles to build, the trade might get away from us. Just know that. Okay. So yes, can you certainly do that? Yes, can certainly wait, let the candles more build a bit, but this moves fast. This candle here moves fast. You could just as easily get a big green candle, and guess what? All of a sudden you at 103, and a lot of
And it's
traders
too
will
late.
do this. Yeah, it's too late. And
Yep.
what a lot of traders will do when you play that game, right? You're hoping for it to pull back, to enter, and then it doesn't, right? It holds, and then it makes another leg up, and then it's like, oh, I should have gotten in. And then you're not trading now, right? You're not trading. You're trying to, you're doing something totally different than trading. Our job, our job is to get in on the buy signal, just to get in on the buy signal, right? Yes. And this is, I don't even know why this happened here, because I think the yen pairs will definitely continue, right? I think they'll continue to move up. But
Now, wasn't there a rally in the equity market today? I'm not in any stocks or nothing like that, but was there one earlier today?
I think the Dow was up 700 points in the futures were up, so in pre-market, but the Dow finished down about 100 points.
Okay,
But
gotcha.
I mean up about 100 points, but big swings. So that's what that call big swings today. All right, but the only thing you can do, and like I said, Brian, and we have a video on Brian talking about it. But the only thing you can do, Gerald, is if you're going to do this, you have to pay close attention to it. Okay. If I would say if it stays above, here, that's a buy. Anytime the price stays above here, green candles, that's a buy. That's a buy. If you've got a white, this happened here, this red candle, that's not normal to get a big red candle like that. Okay. Normally you'll get a white candle. All right. So if you get a white, kind of like here, if you get a white candle, like let's say you were waiting here, Gerald, and then you get a white candle like this, I would say wait. Wait. White candles like this, wait. Yeah, wait. But green candles like this right here, green candles, no, that's a buy. That's a buy. That's a buy. Because yeah, you could get more buying come in. Normally, that's what you would get, more buy, more green candles. White candles, yeah. So if you were here, you got a white candle here, then I would be cautious. If you have purple support and resistance, cautious. But
I just look at when you go through the Euro sessions and we still are going sideways. It's a very concerning time of that when typically the timing of the day, the sessions do matter, but we went sideways with 3 candles. I just seen that before, and Brian, he's right. Sometimes you have to wait, but then I guess you're right. That red candle is not normal. We didn't even get any type of. The 4 market phases are not displayed very good on this particular trade at all, because we went from a buy to a sell in a matter of what, 1 day. So
yeah,
the 4 market phases. I mean, if we trade 4 market phases, that is not a good example of how to follow the 4 market phases, because it happens so quickly. So this may
but
not be a good
yeah,
opportunity, but
but it happens, right? But it happens, right? Because we just don't know, right? But it happens, right? And this is a good example that we just don't know. This right here, go ahead, Dean.
Oh, yeah, no, I'm sorry, Dave. I didn't mean to interrupt you. I had a question after you finish.
Okay, so what we want to pay attention to is here. It broke support right here, right? What if it does this here? It can certainly do that. Our goal, this is the beauty here, from here to here, right? That buy here and that sell here, right? That's the beauty, right? So Solomon mentioned, hey, buy entry and exit. That's it right here. Now, yes, would it have been nice to get a big green candle here? But that's not, it's not the case. You can smooth it out. You can smooth it out by waiting. So if you see this, and this happens sometimes, right, where it consolidates a bit, and it is if it's a day and the price isn't moving higher, yeah, that might be a concern. But guess what? I've seen it where it holds like this, Gerald. We'll see it where it comes back all the way down, and we think it's done, and it comes all the way back, consolidates near support, right, and then does this. All right, we've seen that too. I think this is perhaps riskier here than this here, right? Because here it's near support, but it still holds, doesn't break support, and buyers come in and does this. Okay, but just know that we can do it. Just know that if we play around the buy signals, all right, and Brian has, he has ways of looking at it where he's gonna wait, and then sometimes he can't wait. You just have to take the trade. You just have to take the trade. So just look at it on an individual basis, I guess is what I want to say, right? Really look at the price action.
Yeah, I agree. Individual, every trade, different trade.
Yeah,
yep,
because the minute you have another trade and you compare it to this trade, all of a sudden,
yeah, you can miss it.
right? And then, so all right, Dean, you had a question?
Yes, so Dave, and thank you for that. It's really informative, and Gerald too, because I was looking at the same thing. But my question was, being selective when you're saying every trade is different, and to Gerald's concern about the sideways movement, when or if would I ever use a stop loss to, like being concerned about that sideways movement? Would I have put a stop loss on that just to say, okay, if it goes up, great, but if it goes down below that green, that resistance, below that EMI, SMA, get me out.
Okay,
Yeah, that's
so
what David was saying. A lot of those brokers will get you out because of that stop loss.
yeah.
Yeah.
They'll push you
So
out.
so so let me ask, okay, so when all right, so based on everything that we've talked about, right? The four market
Mhm.
phases, accumulation, support and resistance. Um, where if you wanted to put a protection, all right, and I'm okay with that. I think that the system is gonna do it like it did here, right? It did here, it's gonna get
Yeah.
you out, right? But where do you
Mhm.
think you would put a stop?
That the red SMA.
The red SMA right here?
Yeah. Yeah. I would have said if it goes below that any lower, uh, get me out of there.
And then why here? Why here?
Um, it just I mean that's where the green began, and then it broke resistance on the SMA on that red to the
Okay,
left.
so forget about the SMA. Forget about the
Yeah.
SMA. All right.
Mhm.
So when we enter the system now, when the system enters, it enters
Yeah.
on a break of what?
Resistance.
Resistance. Okay. Don't use the SMA.
Okay.
Okay. It's just your road is gonna separate your buyers from your sellers. It's not,
Got it.
it's not an area.
Yeah. Yeah.
It's yeah. All right. So just totally forget that. All right. Totally
Okay.
forget that.
Okay.
All right. So
Got it.
resistance is here. We're gonna buy on a break of resistance,
Hmm.
like the system did here, and we're going to sell when? Sell when? When are we going to sell?
Break support.
When it breaks support. So you would put your stop loss where?
Oh wow, all the way down there.
Yep.
Yeah.
And the
Wow.
good thing about that, if you do want to trade stop losses, the good thing about putting your stop that low is your emotions have already been dealt with, because you're going to see your loss. You're going to visually see when you put that stop loss. You're going to see how much money you're going to lose.
Yeah.
So, and you're going to see that before you click trade. Before you click trade, you're going to see, okay, if my stop loss is here, I'm already going to lose $100, $200, because that's how much you are planning on losing. Whenever you put a
Right.
stop loss, that means you are planning on losing that amount of money. That's why you
Yeah.
put the stop loss. And it'll
Mhm.
give you a chance to take your emotions all the way out of that trade, because in order for you to click trade, your stop loss at that price point, that means you're already aware how much money you're going to lose. How much money you're going to lose on that trade is already done with. Your emotions are already in there. So the only thing you got to do is just wait for it. And if it hits your stop, it hits your stop. But my question, David, is why did I get a exit arrow at that spot versus the spot that you drew it on? Because it looks like it chose the purple resistance on the second and the third versus the sixth and the seventh.
Okay. All right.
Because I
So
would think that was a better support on
where
six and seven versus two, because it looked like it got me out right at the bottom of. Let me look here.
That wick,
Okay,
I think, broke.
that wick broke now. Unless that wick broke and the system didn't have time to catch it. Maybe it didn't
okay,
have
so
time to
you
catch.
saying you would have
It's
liked it to get you out when?
Yeah, it would like I would like to have got out at 99, like 847.
99,847.
Yeah,
So right now it's
99
at
8.
99.8. It's at 890. So
So the exit is 99,568. Is that correct?
oh
99.
Gerald, you won a lot.
Well, I'm just looking at the system, because if the system got me
So
out,
so look here. Where is okay? So look at it now. Look at it. Where is support? Here is support line right here. Look at this now. Here is support line right here.
But that's not where the system got us out at, though.
Yeah,
It
the
got us
system
below
got
that.
you right here. All right. So Dean, where do you put your support, your stop loss? Based on this right here, where do you put your stop loss? And Gerald, this will make sense.
Okay.
Where
So,
do you put your stop loss?
so if I put the stop loss, hello, can you hear me?
Yeah, I can hear you.
Yeah, right. So there, at, at that level,
I know we don't want to do it, but we have to put
yeah.
it below support. That's your protection,
Wow.
below support.
Yeah,
You
Yep.
have to
below
put it
support,
below
so-
support. Yes.
man,
Yeah.
that's
Yeah.
that's
I
brutal.
know. Yeah. But what happens is this, right? We are exiting, we are getting out because it's not because we're trying to protect a certain amount of capital or percentage of capital. We are getting out because the sellers are coming in. And now
Okay.
we could get a move like this, right? We could get where the sellers, when the price breaks support, right? That means that sellers, there's a good chance sellers are coming in to continue the move down. That's the only reason
Gotcha.
we're getting out. If we put a
Okay.
if we put a stop loss in here where we do not have support, guess what? You're gonna get stopped out, and then guess what? The trade is still live. All in here, all in this area in here, the trade is still live. All in this
Okay.
area in here, the trade is still live. The trade is not live until it breaks support here. Now,
Gotcha.
there are times, and you guys will see this, where resistance becomes support. All right, resistance becomes support, and the system will get you out here, right? It'll get you out right below, right? This support here. All right, it will happen, right? I don't like this. I'll take it if it works out, right? I'll take it if it works out, right? So guess what? If it gets us out here, and then the price does this, I'm happy, right? I'm happy. But a lot of times, what will happen, right? If there are two areas of support that it will get you. When resistance becomes support here and then here. What happens though, if it gets you out here, that's not true support. Your real support is here. So you might get a sell signal here, and then guess what? The price does this. And then it might give you another buy signal all the way up here. All right, on another break of resistance right over here. All right, this trade right here, I want to keep this trade. All right, I rather take this loss. I rather take this loss. It's a harder loss. Okay, but here I know, okay, there's a real chance of a change in direction. All right, a change in direction. All right, look at it here for a second. Is it starting to make sense? Because this is important. This is important.
Yeah.
All right. Here is accumulation. Here is support right here. All right. Just think of the 4 market phases. Here is support. Here is resistance. Here is accumulation. All right. Here is your break of resistance, right? Your buyers. That's all in here is buyers, that's buyers territory, All right. It will have to break like it did here. You see that now, Gerald? You see where that candle here, right? That wick came down here.
Yep.
Right. It didn't give you a sell signal until it came down here. If that candle had stayed right in here, you would not have gotten a sell signal.
Yeah, I think I see what you're saying, David. It just, I would like to have, I don't know, I guess I would like to have that signal come right there instead
right
of that
here.
right, yeah, because instead of that wick coming down, because it just seemed like that's not a real support down there. It just seemed like where you are right now is the real support.
And
But
sometimes it will.
Yeah.
Sometimes, yes. Sometimes it will, right? And but how would you feel though? Let's say, Gerald, let's say overnight it does it like this. How would you feel about this getting you out here now?
Oh, I would love it. Oh, absolutely love it. I mean, the
Right, right.
system did exactly what the system was supposed to do. Absolutely.
Oh,
Yeah.
So yeah, I'm just nitpicking at this point.
yeah, and
But
yeah, so sometimes and it's not exact. It's not exact, right?
Yeah.
Sometimes it's going to get you right here. All right. And if it depends on how fast the market is moving too. If the market is moving really fast, and I wish I could show you guys some examples, but more
oh
examples.
no, you're right, because there are sometimes the system can't catch up with the market, and then you just got to take that ride. Yeah, you're gonna have to take that ride if you're not paying attention.
Yeah. And think about it like this. I think of it like this, right? Um, Now, we've had the systems for a while. I'm just happy that we're able to get out here. All right. Here. Now, try it. Try it. Watch these markets. And Gerald, try it out. That's what Brian did. Brian watched it. And there are times when he waited, right? So he's 50-50 on it. He's 50-50 on it, right? Where sometimes he'll wait and he might miss it. All right. And sometimes, guess what? He'll take it. That's the risk you take. But just know that just what you guys need to know, and Solomon, you too, is that this whole area here, this is tradable. Once the buyers come in, you get your buy signal. This whole area here is still it's now buyer's territory, because this will happen. It pull back, retrace again a bit, pull back in here, does this a lot. It will do this a lot, and then it will do this. So if you put stop,
This is a very good setup, by the way. This CAD yen is a very good trade, look like in the future, because it's setting up very well.
oh yeah, don't give up on it. Yeah, you could,
Yeah.
you could come back and buy, but just know here, you got pretty good support here. Now, I know what you're gonna say, David, right? If it, let's say it goes up here, breaks resistance and move higher, man, I had a loss here, right? I had a loss here, right? It should not have gotten me out, but we just don't know. We just don't know, because guess what? The rule is when the price breaks support, we've got to get out, because we don't want this and we don't want this. All right. So we want to take those small losses. We want small losses so that we can stay alive to get the big wins. All right.
Yeah. Yep.
Yeah.
I agree.
Yep. Yep. And then we'll finish up with this.
Yeah.
For you, moving averages just for separation. All right, moving averages just for separation.
Got it.
It use your support and resistance. So your
Okay.
resistance, you buy on a break of resistance, you're gonna sell on a break of support. Break of support, sell here. That's it.
Yeah.
We're gonna do that every time. Watch your systems, and you will see where your system will get out right near break of support, getting right on the break of resistance. Okay.
And one question from me about moving average is why the black moving average? What was that about again?
Which black moving average?
the black one in between the green and the red one. So I know, I'm just saying,
Oh,
like,
the
just for
road,
me,
the road.
Dean, cover your ears, just for me. I just want to know.
No, the road. I got the road.
I know we can't look at all this data; it can be confusing. But I was just wondering why the
Gerald,
black one though.
I don't see a black moving average.
Oh, I see it all the time, David. All the time.
Oh man, it's funny how
Oh,
people see things. It's so funny
ah,
how people see things.
you're not
Wow.
you're not supposed to see that.
I've always seen the black
You've
moving. I
always
never
seen
paid
the black
attention. I
one.
never paid attention, so I just always wondered
Oh
why.
wow.
What am I focusing on here? But um, you
So
know,
Oh
it's yeah.
wow.
So yeah. So the black one, it's just a moving average in between here. All right. All right. So um,
Yeah.
it's not really necessary because now if we have it, we've made it black so that you don't see it.
okay.
Because what happens is this, right? It's not because of separation now. So everything is done for a reason, right? So now if you had, let's say you had, look at it this way. Look at it like this now. And I promise we'll be done. Look at it like this here. All right, let's say we had this moving average here. Let's say we had that black moving average was a yellow moving average and it came along right along here. It's in the middle. The black is in the middle there. If you look close, it's there. All right. And it does this right here. Does this moving average here, does this look different? I know, I know cosmetically it looks different, right? You've gone from 2 to 3. But how does this here look any different?
Oh, it's too much data. We don't need all that.
It's too much data. What
Yeah.
else? What else?
It's, it's not
What else?
necessary.
Yeah,
you know,
but
I'll
there's a
bring it up
reason.
just.
There's a reason why we made it black so that you couldn't see it. What else?
And that reason is, oh,
Because now it doesn't give us true separation.
oh, that is so true.
Yeah.
It's all one big line there.
It's just one big, like every other moving average that's
that's
out
so
there.
true.
Okay. Didn't you see that?
Yeah, I was
Yes,
talking to
yes, I
Dean the
do.
other day about how strategic Monster Scalpel is compared to other platforms because it just
Right.
aesthetically it's easier on the eyes, the way the eyes, the way that everything focuses in, the way the mind works. It's just so much easier. So I agree with that.
Yeah,
I
less.
agree too. I
Yeah.
have to change my thought pattern too because I was looking at the SMA like similar to like the Bollinger Band, and you know,
No,
the closer it
no,
goes and
no.
the candlesticks are going closer. And I'm
Yeah.
like,
Yeah, yeah. So we use the moving average, right? We use the moving average just for separation.
separation. Okay.
Just for separation. And what we want to see is we want to see buyers. Okay, we want to see green. Okay, so that's why it's black. Okay, that's why it's black there, because if it's yellow or any other color in here, then we don't see their separation, right? Red, these are the sellers here. Red, moving average, red candles, sellers are in control. Green candles, green moving average, right above here, buyers are in control. Longs are in control. If we introduce any other color in here, it throws this off. Any other color other than black will throw this off.
Yeah, that makes sense.
Yeah.
David, I've never seen an RSI look the way it looked this long for these pairs. It's remarkable. The RSI, it shows as if the world is perfect. You know, there's not overbuying, there's not overselling. It's just right down the middle.
Mm-hmm.
And it's crazy. But we definitely look forward to the next trend.
Yeah. So good example, right? This is an absolute perfect sell signal, right? So whether our job, and we cover this when you guys first come in and we do the beginners class, right? And we bring out the 4 market phases and we do support and resistance, remember? And we always say you're gonna buy on a break of resistance, sell on a break of support, right here, right? Buy on a break of resistance, buy on a break of resistance, sell on a break of support. That's it. That's it. And guess what? We have the systems that's doing the same thing. It's doing the exact same thing. All right, because we don't know, right? And Gerald, yeah, you will be if it does this overnight, you're gonna be really really happy.
Oh
Yes,
yeah, oh
you,
yeah. You'll
yeah,
trust me, I will be
you might
ecstatic.
have you might have saved let's say you 20 pips, right?
Yep.
But much better than this, and much better than staying in the trade and worrying, being concerned about it. We've got red candles here. We need support. This is nothing to play with. All right. We just have to get out. All right. Because this can happen here. All right. All right. And we don't want to play in this area here too. If we're getting in and getting out, getting in and getting out in this area in here, all right, even in here, really, boy, if we're getting out in this area in here, if we bought here and we're getting out in here, we've got to wait. We got to wait for the sellers to come in and break support. And I will watch this. Remind me on this trade, and we'll watch it as a lesson to see what price does. Okay.
Good
Yeah,
stuff, David.
looking forward to it. Definitely. Thanks, David.
This is how we
Appreciate it.
learn. This is hey guys, we learn with our winning trades. But some of
Absolutely.
our larger lessons, bigger lessons is with right here, the losers too, the losers. Okay. All right, guys. Take care. See you guys tomorrow. Take care.
Thank you. Okay.
Take care.
Take care. Take care,
Okay,
Gerald.
guys.
All right.
See you,
Bye-bye.
bud. Yeah.
Bye.